Assalamualaikum madam. Okay, my name is Siti NURHAZIRAH binti JAMALUDIN and I'm from Group 5. We have completed the report on company financial ratio analysis, which is involved two company, Bermaz Auto Berhad and Cycle and Carriage Bintang Berhad. The first company is Bermaz Auto Berhad. Bermaz Auto Berhad, which is called Bauto, was participated in Malaysia on 11 May 2010 as a private limited company under the name Fiscal Stat Sdn Berhad. The old name of the company was Berjaya Auto Berhad, and it was named on 14 February 2011, and after that it was changed to Bermaz Auto Berhad on 11 October 2016. The director of the company was Datuk Sri Yuh Chun Sain. He managed Bermaz Motor Sdn Berhad, Bermaz Motor Trading Sdn Berhad, Bermaz Auto Philippine Incorporation, Mazda Malaysia Sdn Berhad, and Inocom Corporation Sdn Berhad. The company was an investment holding company. They have operated over 6 3S, which is the 3S is sales, spare parts, and after sales service. Their main activity is about automobile dealers, and their activity related to the sustainability focus on improving safety standard for consumer, climate protection, green technology via EEV, which is the EEV is energy efficient vehicles, and so on. This all was outlined in the NAP. Okay, the next company is Cycle and Carriage Bintang Berhad. Cycle and Carriage Bintang Berhad has been set on a business together with the Mercedes-Benz in 1951. CCB, which is Cycle and Carriage Bintang, was established in 1967 and situated in Kuala Lumpur, Malaysia. They also have been listed in Bursa Malaysia under the main market. The company is engaged in retailing of motor vehicle, sale of spare parts, and servicing of vehicles. So they have been operated in 3 segments, which is the first segment is automobile industry, which include assembly, distribution and retailing of motor vehicles, distribution and sale of spare parts, and servicing of vehicle. For the second segment is investment, which is investment in Mercedes-Benz Malaysia Sdn Berhad, and the others last one is which is property investment through the related company. It is said that they are one of the leading Mercedes-Benz dealer in Malaysia, and they are the most experienced and preferred new and used Mercedes-Benz vehicle dealership in Malaysia. They have 10 sales auto house and 10 after sale auto house all across Malaysia. They also have 6 auto house in Klang Valley, which is a very strategic place to provide one-stop convenience to their valued customer and to their international standards auto house.
Assalamualaikum to everyone who is watching this video. So my name is ASYRAF. So today I would like to show you the basic analysis that I've done for the Bermaz Berhad. So basically there are 2 of financial year involved in the analysis that I've done, which is year 2018 also 2018. So basically according to the analysis that I've done, so I can conclude that the performance of 2018 of the company is better than the financial year of 2018. So basically, in terms of the asset, so basically they are non-current asset and also current asset. So in a year 2018, the current and non-current asset that held by the company is better than the financial year of 2018. So as an example, as we can see from the balance sheet, so in year 2018, so the percentage of the PPE stand at 2.81% compared to the previous year of 2.33%. So this shows that the company managed to increase the amount of the PPE held by the company. So basically this shows that the company have a lot of resources, and they use their resources effectively, as the PPE can be used to generate future economic benefit for the long-term outlook. So this also happened to the other asset such as inventory, trade and other receivable, and also tax recoverable. So basically this company show a very good performance in term of that. So we move to the liability of the company. So as example, as we can see for the short term borrowing. So during the year of 2018, the percentage stand at 5.41%, which is quite high. But in the year 2018, the amount becomes zero. So this shows that the company managed to settle all of its short term borrowing according to the payback period, which is within a year. So this shows that the company managed to pay their debt according to the time. So in the equity, the company also have managed to control the equity very well. So as we can see, the percentage also increased in the equity. In the total equity in the year 2018, the percentage stand at 61.58%. But in the year 2018, the percentage increased to 63.02%. So which means the company managed well their equity and also their liability. Okay, so next we move to the analysis of the income statement of Bermaz Berhad. So yeah, in the year 2018, they managed to generate a lot of sale compared to the year of 2018. So which means a higher number of sale generate a higher profit for the company. So the percentage also prove that they managed to get that result very well. They also managed to reduce the cost and expense that incurred in the year of 2018. As example, you can see at the finance cost. So they are dropped quite a lot for the finance cost of the company. During the year 2018, the percentage stand at 0.28%, but in the year 2018, it dropped significantly to 0.03%. So this means that the company managed to control their expense very well. So next, we will move to another company, which is called the Cycle and Carriage Bintang Berhad. So the financial year that involved is 2018 and also 2019, same with the Bermaz Berhad. So although I can conclude that based from what I see for the analysis that I've done to the both of this company, so for Cycle and Carriage Bintang Berhad, they have suffered a lot of loss in the year 2018. So their performance is slightly different from Bermaz Berhad. So based on the vertical analysis that I've done for their income statement, so basically in the year 2018, they have generated a lot of loss compared to the year 2018. So if you see the revenue that have incurred in the year of 2018, so it is less compared to the year 2018. So which means that they have generated less sale compared to the previous year. The cost of goods also increased, which add more burden to the company, together with their other income, which have dropped significantly compared to the previous year. So this have resulting a lot of loss in the company. So according to the balance sheet of the Cycle and Carriage Bintang Berhad, so if we look at the amount of asset that held by the company is lower in the year 2018 compared to the year 2018. So this means that the company has struggled to take care of the asset very well. So one of the example that we can see is in the amount of the inventory. So in the year 2018, the amount of inventory stand at 40.39%, but in the year 2018, it become 48.21%. So this happen to the difficulty for the company to generate sale. So when the company fail to generate sales, so they held the inventory too long in their cart. So when the inventory cannot be sold, so the company cannot generate profit. So this is one of the factors that contribute to the losses that they incurred in the year 2018. So in the term of the liability, so an example that we can see from the balance sheet is in the trade payable and other liabilities. So basically in the year 2018, the trade payable stand at 20.61%. Compared to the year 2019, it increased to 23.70%. So this happened because the company doesn't have enough money to buy inventory in time. So they had to buy goods on credit. So this is quite a worrying situation because they need to have a lot of debt in the future. So it's quite worrying to see the performance of the company, which is quite bad in the year of 2019.
Assalamualaikum warahmatullahi wabarakatuh. My name is SITI ADLINA binti SHAMSURIZAN. I will present point number 5, which is financial ratio analysis for trend analysis. For liquidity ratios, there are 3 types of liquidity ratios. The first one is current ratio, the second one is quick ratio, and the third one is net working capital. So the formula for current ratio is current assets divided with current liabilities. The current ratio in 2019 is 2.79 times, while in 2018, 2.50 times. So in the year 2019, the company has higher current ratio compared to the year 2018. This means the company has more current assets to pay for its current liabilities and is able to meet its short-term obligation on time. For quick ratio, the formula is current asset minus inventory minus prepaid expenses divided with current liabilities. So in year 2019, the quick ratio is 1.66 times, while in 2018, the quick ratio is 1.55 times. So in the year 2019, the company has higher liquidity compared to the year 2018 for its quick ratio. This means the company has more current assets to pay for its current liabilities. Even after deducting inventories and prepaid expenses, the company is still able to meet its short-term obligation. For net working capital, the formula is current asset minus with current liabilities. So in 2019, the net working capital is RM450655, while in 2018, the net working capital is RM392825. So in the year 2019, the company also has higher net working capital ratio as compared to the last year. This means the company has sufficient margin of safety due to more amount of current assets than current liabilities. For activity ratios, we have average collection period, fixed asset turnover, inventory turnover, and total asset turnover. For average collection period, the formula is account receivables divided with sales and multiple by 360 days. So in 2019, the average collection period for this company is 14.04 days, while in 2018, the average collection period is 18.14 days. So in the year 2019, the company has lesser average collection period as compared to the year 2018. This means the company is efficient in collecting its credit sales in short period. The formula for inventory turnover is cost of goods sold divided with inventory. So in 2019, the inventory turnover is 7.26 times, while in 2018, 6.69 times. In the year 2019, the company has higher inventory turnover ratio. This means the company is also efficient in using inventory to generate sales compared to the last year performance. For its fixed asset turnover, the formula is sales divided with fixed assets. So in 2019, the fixed asset turnover for this company is 9.51 times, while in 2018, 10.13 times. So in the year 2019, the company has lower fixed asset turnover ratio as compared to the year 2018. This means the company is not efficient to generate sales with small amount of investment on fixed assets. The last one is total asset turnover. For total asset turnover, the formula is sales divided with total assets. So in 2019, the total asset turnover for this company is 2.60 times, while in 2018, 2.34 times. The company has good performance for its total asset turnover ratio in 2019. This means the company is efficient in managing all assets to generate sales compared to the last year performance. For leverage ratios, we have three types of ratios, which are debt ratio, debt to equity ratio, and times interest earned. For debt ratio, the formula is total debt divided with total assets. So in 2019, the debt ratio for this company is 36.98%, while in 2018, 38.42%. The company has lower debt ratio in the year 2019 as compared to the last year. This means less of the company's assets are financing by debt and have low financial risk. For debt to equity ratio, the formula is long-term debt divided with total equity. In 2019, the answer is 0.17 times, while in 2018, the debt to equity ratio for this company is 0.12 times. The company's performance in 2019 is poor due to the higher debt to equity ratio compared to the last year. This happened because most of the capital in that year are from borrowings. Lastly, for times interest earned, the formula is EBIT divided with interest. In 2019, the times interest earned for this company is 4.62 times, while in 2018, the times interest earned for this company is 4.27 times. So in the year 2019, the company has higher times interest earned ratio compared to the year 2018. This means the company has high ability to pay for interest payment and has enough margin of safety.
Assalamualaikum. My name is MEGAT and I'm going to continue more about the trend analysis for Bermaz Auto Berhad for the year 2018 until 2019. Firstly, profitability ratio. There are 5 items in it, which is gross profit margin, operating profit margin, net profit margin, return on asset or return on investment, and lastly, return on equity. The formula of gross profit margin is gross profit divided by sales times with 100. For the evaluation of the company performance, in the year 2019, Bermaz Auto Berhad has a higher percentage of 18.2% compared to 2018, which the company has 16.97%. So, this shows that the company has a good performance in generating profit after deducting direct costs from its sales for 2019 compared to previous year, which is 2018. Next, operating profit margin. The formula is earning before interest and tax divided by sales times by 100. For the evaluation of the company performance, in the year 2019, Bermaz Auto Berhad has a higher percentage of 11.55% compared to 2018, which the company has amount of 9.1%. This is after Bermaz Auto Berhad has deduct direct and also indirect costs. This shows that in the 2019, the company has a good performance compared to 2018. Furthermore, net profit margin. The formula is earning after tax divided by sales and times by 100. For the evaluation of the company performance, in the year 2019, Bermaz Auto Berhad has gained amount of 10.59% compared to the previous year. which the company has amount of 7.58%. This shows that Bermaz Auto Berhad in the year 2019 can generate better profit even after deducting all costs compared to the previous year, which is 2018. The formula for the return on asset or return on investment is the earning after tax divided by total asset times by 100. For the evaluation of the company performance in the year 2019, Bermaz Auto Berhad has gained amount of 27.57% compared to 2018, which the company has amount of 17.72%. This show that in the 2019, the company can generate higher profit from its investment in total asset compared to 2018. Lastly, the formula for return on equity is earning after tax divided by total of equity times by 100. So, in 2019, the company has amount of 43.75% compared to 2018, which the company has 28.78%. This shows that the company is able to pay more profit to its shareholder from their investment in the year 2019 compared to 2018. Next, the market ratio. The market ratio has 4 items in it, which is earning per share, price earning ratio, dividend payout ratio, and also book value per share. The formula for earning per share is earning after tax divided by number of outstanding shares. For the year 2019, Bermaz Auto Berhad has a higher earning per share compared to 2018. This shows that the company in 2019 has more earning or profit that can be offered to the investor for each share that been invested compared to 2018. The formula for price earning ratio is market price per share divided by earning per share. In the year 2019, Bermaz Auto Berhad has a lower price earning ratio compared to 2018. So, the investor is paying less money per RM of current earning in 2019 compared to 2018. This shows that the 2019, the company has a poor performance compared to 2018. The formula for dividend payout ratio is dividend divided by earning after tax times 100. In the year 2019, Bermaz Auto Berhad has a higher dividend payout ratio compared to 2018. This shows that in 2019, the company has a higher percentage of profit for dividend payment, and the company also be able to pay more dividend to the shareholder. This shows that in the year 2019, the company has a better performance compared to 2018. Lastly, the formula for book value per share is shareholder equity minus by preferred stock over number of shares outstanding. So, the evaluation is in the year 2019, Bermaz Auto Berhad has a lower book value per share compared to 2018. So, the company has a low book value per share in the year 2019. This shows that the company has a poor performance in 2019 compared to 2018. Now, I'm going to talk about comparative analysis, which is done to compare between the company and also its rival competitors. For this presentation, I'm going to talk about the company of Bermaz Auto Berhad and also Cycle and Carriage Bintang Berhad for the year 2019 only. For my part, I'm going to talk about liquidity ratio and also activity ratio. For the liquidity ratio, there is 3 items in it, which is current ratio, quick ratio, and also net working capital. The formula of current ratio is current asset divided by current liability. So, the evaluation of the company performance is in the year 2019, Bermaz Auto Berhad has 2.79 times of current ratio, which is higher compared to Cycle and Carriage Bintang Berhad, which has 1.31 times of current ratio. This shows that Bermaz Auto Berhad is able to pay its current liability and also able to meet its short-term obligation due to having more current asset compared to cycle and carriage Bintang Berhad. This also show that in the year 2019, the Bermaz Auto Berhad has a better performance compared to cycle and carriage Bintang Berhad. The formula of quick ratio is current asset minus inventory minus prepaid expenses over current liability. So, for the evaluation of the company performance is, in the year 2019, Bermaz Auto Berhad has 1.66 times of quick ratio, which is higher compared to cycle and carriage Bintang Berhad, which has 0.36 times of quick ratio. This shows that Bermaz Auto Berhad has more current asset without considering inventory and prepaid expenses to pay for its current liability, and also it also able to meet its short-term obligation. So, for the year 2019, Bermaz Auto Berhad is or having more better performance compared to cycle and carriage Bintang Berhad. The formula of net working capital is current asset minus current liability. So, the evaluation of the company performance is, in the year 2019, Bermaz Auto Berhad has amount of RM 450,655,000, which is higher compared to cycle and carriage Bintang Berhad, which has amount of 118,428,000. This shows that Bermaz Auto Berhad has a sufficient margin of safety due to having more amount of current asset compared to current liability. So, in the year 2019, the Bermaz Auto Berhad has a better performance compared to cycle and carriage Bintang Berhad. Next is activity ratio. In activity ratio, there is 4 items, which is average collection period, inventory turnover, fixed asset turnover, and also total asset turnover. The formula of average collection period is account receivable divided by sales times 360. For the evaluation of the company performance is, in the year 2019, Bermaz Auto Berhad has 14.03 days, which is lower compared to cycle and carriage Bintang Berhad, which has 30.32 days. This shows that Bermaz Auto Berhad is efficient in collecting its credit sale in shorter period compared to cycle and carriage Bintang Berhad. We show that Bermaz Auto Berhad has a better performance in the year 2019. The formula of inventory turnover is cost of goods sales divided by inventory. So, for the evaluation of the company performance in the year 2019 is, Bermaz Auto Berhad has 7.26 times, which is higher compared to cycle and carriage Bintang Berhad, which has 3.28 times. This shows that Bermaz Auto Berhad is efficient in using its inventory to generate sales in the year 2019 compared to cycle and carriage Bintang Berhad. Furthermore, the formula of fixed asset turnover is sales divided by fixed asset. So, for the evaluation of the company performance is, in the year 2019, Bermaz Auto Berhad has 9.51 times of fixed asset turnover, which is higher compared to cycle and carriage Bintang Berhad, which has 8.63 times. This shows that Bermaz Auto Berhad is more efficient in generating high sales with a small amount of investment on fixed asset in the year 2019 compared to cycle and carriage Bintang Berhad. Finally, the formula of total asset turnover is sales divided by total asset. So, for the evaluation of the company performance is, in the year 2019, Bermaz Auto Berhad has 2.60 times of total asset turnover compared to cycle and carriage Bintang Berhad, which has 1.53 times. This shows that Bermaz Auto Berhad is efficient in managing its asset to generate sales in the year 2019 compared to cycle and carriage Bintang Berhad.
I will present to you about comparative analysis for the year 2019. This comparative analysis between company Bermaz Auto Berhad with cycle and carriage Bintang Berhad. First, leverage ratio. There is 3 in leverage ratio, which is debt ratio, debt to equity ratio, and time interest earned. To evaluate debt ratio, Bermaz Auto Berhad actually has lower ratio than cycle and carriage. This means Bermaz has better debt ratio rather than cycle and carriage. Bermaz Auto Berhad assets are financed by their debt.
and they have low financial risk. For debt to equity ratio, again, Bermaz Auto Berhad have lower ratio rather than Cycle and Carriage Bintang Berhad. They have better debt to equity ratio as they have less amount of firm's capital that is from their borrowing. For time interest earned, Bermaz Auto Berhad shows that they have higher and better amount of time interest earned. Bermaz Auto Berhad has high ability to pay for interest payment and has enough margin of safety in their company. Next is profitability ratio. There are 5 ratios in this term. First is gross profit margins. Second, operating profit margins. Third is net profit margin. Fourth is return on asset. And lastly is return on equity. For the evaluation in profitability ratios, first, gross profit margin. Bermaz Auto Berhad has higher percentage. This means that Bermaz Auto Berhad has better gross profit margin rather than Cycle and Carriage Bintang Berhad. Bermaz Auto Berhad are able to generate more profit after deducting direct costs from its sales. Next is operating profit margin. Bermaz Auto Berhad has higher and better operating profit margin. This shows that Bermaz Auto Berhad gains more profit after deducting their direct and indirect costs. Next is net profit margin. Bermaz Auto Berhad again have better and high net profit margin rather than Cycle and Carriage Bintang Berhad. This means that Bermaz Auto Berhad making higher profit after deducting all the costs. Next is return on assets. Bermaz Auto Berhad has higher percentage and better return on asset. This shows that Bermaz Auto Berhad are able to generate high profit from its investment in total assets. Lastly, return on equity. Bermaz Auto Berhad has higher percentage and better return on its equity to the shareholders. Bermaz Auto Berhad shows that they are able to pay more profit to their shareholders from their investments. Lastly, I will present about market ratios. There are 4 items in market ratios, which is earning per share, price earning ratio, dividend payout ratio, and book value per share. Bermaz Auto Berhad has higher amount earning per share rather than Cycle and Carriage Bintang Berhad. This means that Bermaz Auto Berhad has better earning per share, and it means more earnings and profit that can offers to the investor for each share invested. Second, price earning ratios. Bermaz Auto Berhad has higher ratio and better price earning ratio. This means that investors of Bermaz Auto Berhad are willing to pay more money per ringgit Malaysia of current earnings that they invest. Next, a dividend payout ratio. Bermaz Auto Berhad has higher and better dividend payout ratio rather than Cycle and Carriage Bintang Berhad. This shows that Bermaz Auto Berhad has higher percentage of profit for dividend payment and able to pay more dividend to their shareholders. Lastly, book value per share. Bermaz Auto Berhad has higher and better amount of book value per share. This means that they has high book value per shares outstanding in their market.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is NURHAZIRAH AL-MIZI Bintang TARMIZI. I'm in charge for the conclusion and the recommendation from the financial ratio between Bermaz Auto Berhad and Cycle and Carriage Bintang Berhad. So we may conclude from the findings and the calculation that importance of the ratio as tool for the strategic analysis plays the vital role in the business planning, which is we may know that our company face poor or good performance. Financial ratio also show which company has better performance and may maintain lower risk. So when we give out, when we show that our financial ratio is poor or good, we may attract and convince the investor, either they want to proceed or to hold, to buy or to sell their shares in our company. So from our finding that Bermaz Auto Berhad give a high return as it give more profit. So for the recommendation, I would like to suggest for the company Cycle and Carriage Bintang Berhad to improve their current asset by raising the shareholder funds, which when the current assets are financed by the equity, which is rising from the shareholder funds, the level of current asset will increase with the current liabilities remaining the same. So the consequence from this as well will improve the current ratio. Okay, for the sale of unproductive asset, this is because when we sell unused fixed asset, it may increase our cash level and liquidity. For the pay of current liabilities, it not only does for the current ratio only, but it depends on the current asset. It's equally dependent on the current liability, which is the denominator. This should be paid off as often as early as possible. When this will decrease the level of current liabilities and therefore improve the current ratio. That's all. Thank you.